Good afternoon, everyone. My name is Glennis Waters. I am with GIOA. We are the engine behind the benefits offered by your Chick-fil-A operator. We are super excited to be here today to talk to you about our pre-tax benefits for team members. So today's presentation is going to be packed full of information for you to understand and how your pre-tax benefits will work in 2026. Some of you may have received information already. We did send out some videos and recordings, and we hope that you did take a moment to watch those. But if not, today's presentation will certainly cover everything there and a bit more information. As I just stated, beginning in January, our benefits are pre-tax. We're going to talk a little bit about what that means for you, but many of you should have already seen a little bit of a bump in your checks because your benefits, if you participated, came out before we took taxes out of your check. So the benefits that qualify for pre-tax are your medical, dental, vision, and health savings account, or your HSA, if you have chosen to participate in those benefits. This does mean all of the other benefits will remain post-tax, and those will include your voluntary life for yourself, your spouse, or your children, your short-term disability, and any voluntary plan coverages that you have, which is your critical illness, your hospital indemnity, or your accident plans through Securian. Those will stay post-tax. So for today, we want to make sure we talk about what is a Section 125 plan. I know that's a new term for many of you, and that is the IRS code that regulates us for the pre-taxes. So we're going to talk briefly about that just so you understand what it is. We're going to talk about what a qualifying life event is and how that impacts you for your pre-tax benefits, what kind of changes that you can make, and any helpful tips that we can give you to help you be successful this year as we are rolling out pre-tax benefits. So first, what is Section 125? This sounds kind of scary, but really it is just the name of the IRS code that we are governed by that creates what we call a cafeteria plan. You don't have to memorize it, just understand that we are now bound by IRS regulations because we are getting those pre-tax benefit breaks, okay? So Section 125 again is the code that allows us to offer these benefits to you and take them out of your check before you are taxed by the government. And in exchange for this, you have to follow the rules and regulations under the IRS code section 125. So we're going to dig a little bit deeper into that. What that really equates to are these three things. The first thing is the section 125 allows us to give you medical, dental, vision, FSA, and HSA pre-tax. So you're paying for those medical coverages with dollars before you are taxed. So this essentially reduces your taxable income. So in 2025, for example, if you made $100, you paid taxes on $100 and then you paid for your benefits. In 2026, if you make $100, we're going to take your benefits out of that $100 first and then tax the remainder amount. So it does reduce how much taxes that you pay. Because of that, there are election rules that apply. That takes us to number 2. This means the IRS requires us to lock you into your benefit elections for a full year. You normally will make these elections during open enrollment. The only other time that you can make these changes is if you have a qualified life event. We're going to break this down a little bit in a couple slides, but essentially what that means is once you enrolled, you are in those plans until you qualify to change or remove those plans. The same thing about starting to participate in those plans. This is a big change for us because we were post-tax last year. So that means if you did not want your benefit or if you could not afford it, you could drop it at any time. This does no longer apply for our plan. So that's a super important point, and we will drill down into that in a little bit. The other thing, number 3, is this is all compliance. So if you go in to make a change and you're not following the rules of the plan, it will be declined or denied, and that is because we are now under compliance regulations. So make sure you understand just those three things. Benefits are pre-tax. Because you're getting those tax savings, there are rules about how you can come in or come out of our plans, and all of that is based on compliance, which means we have to follow the law in order to maintain our pre-tax benefit standing. So, what is a qualified life event? A lot of you have seen these before. We have these on the plan, they've always been here, but for the purposes of adding coverage. Now it is for the purposes of adding and removing coverage. So, some of those life events include marriage or death, divorce, adoption, birth, legal guardianship, gain or loss of medical coverage. That includes your Medicaid, your Medicare, and your CHIP. And for those of you who don't know, CHIP is the child coverage provided by each individual states. So in Georgia, we call it Peach Care, maybe called somewhere else in another state. It also covers returning from leave and going out on leave, that is for medical leave and military leave. We haven't historically talked about this a whole lot because the benefits were post-tax, but this is certainly important this year because now we are pre-tax. It also covers if you have a change in employment status. So, what that looks like is if you go from part time to full time or full time to part time, you can also make changes to your benefits. Again, all of these qualified life events have been here, but we're focusing on them this year because these will now apply for you to add coverage and to drop coverage. Drawing your attention one moment to two specific life events. One is a qualified medical child support order. Those you do not elect. We automatically put those onto the account if we get a request from a state. That is for medical coverage for child support purposes. So those are automatically added. If you get one of those, we will assess it to see if it's valid and it's automatically added to your account. No action required by you. And once that is added, we cannot remove it without another court order. The other one is for legal guardianship. Those are also typically court ordered as well and require documentation from the court. So just wanted to call those little bit of pieces out. But outside of that, these are our qualified life events for 2026. So as we talk about qualified life events or QLEs, we want to make sure to point out to you how this process actually will work for you to ensure that you understand every bit that you have to do as your responsibility. The first thing is most of the qualified life events have a 30-day notification and election window. The exceptions to this are death and birth and court-ordered changes. So outside of those, if you get married on January 22nd, you have 30 days, 30 calendar days, okay, not business days, calendar days, to notify us of that change, to make your elections, and to turn in your documentation. January 22nd, since January has 31 days, it would be February 21st to do that. With all qualified life events, you must submit documentation to support your event. Just because you select that you got married on January 22nd does not mean we do not require that documentation. Each time you go into the system and elect a life event, it will tell you that you must submit documentation, and at the end of your election window, it prompts you onto what are acceptable forms of documentation. So for marriage, for example, that will be your marriage certificate, not the marriage license. Okay, the certificate shows it is complete. For birth, it will be your birth certificate or your confirmation of birth from the hospital. For death, it will be your death certificate. So you do need to have that proper documentation. If your spouse is adding you onto their plan, you will need proof that you have been added onto another plan or terminated from a plan in order to make changes to our benefits. So you must submit that documentation based on the life event that you select that you qualify for. Your elections will not be approved until your documentation is submitted. They will show the effective date of the benefit change. It will look as if it is approved, but it actually will not be sent to Anthem or any benefit carrier until you have submitted your documentation and that documentation has been approved. Those are two steps. You submit it, and then our team will receive it and make sure it is within the right time frame and is for the life event that you have selected and it has been approved. If there are questions about your documentation, you will get a notification via email that there is a question. So please look out for emails. You can always log into your account and look at the status of the documentation that you submitted. Keep in mind, you have to do this. This onus is on you as a team member. If you select a qualified life event and you do not turn in your proper documentation within the time frame, then that life event will be canceled or denied, and you will not have coverage, or you will not be able to remove that coverage. The only exception to that is death and divorce, if you are removing a spouse that you have divorced, and that is because they're no longer eligible dependents under the plan. Once your documentation is approved, your benefits will take into effect. Most life events are effective the first of the month following your change. We say most because the exception, and you probably guessed it, is birth and death. Birth is always effective on the date of birth of the child, and death is effective the date of death. Depending on who passed away, will depend on when the benefits start or end. Okay? So now let's talk about what kind of changes can you make when you have a qualified life event. We have these in 3 categories for you. So the first type of change you can do is drop your coverage. So if you become eligible under another plan, so let's say your spouse covers you because you got married, now they're going to cover you, you can drop your coverage, okay? If your child gets eligibility under their other parents plan, or under a state plan, you can drop coverage. You have to show proof that you have now been eligible for a new plan, you've enrolled in the effective date of that as your documentation, and you can drop that coverage. If you are returning from leave or going on a leave of absence, that also allows you the ability to drop the coverage. If you have a change in employment status and the benefits are now too expensive for you. So this will look like I went from full-time to part-time, or I went from group 1 to group 5. Those are changes that will allow you to drop the coverage. So you can drop within those qualified life event reasons. You can add coverage to yourself. You can enroll yourself freshly, or to newly eligible dependents. This will be done with mostly all life events when you have one. So marriage, if your spouse dies and they're recovering the family, you can add them to your plan. If you get married and you want to cover the family, you can add them to your plan. With the add coverage option, just be aware, if you are adding dependents to the plan, you will need to provide proof of that dependent eligibility. So if it's a spouse, you're already adding the marriage certificate if you're newly married. But if they just lost coverage and you're adding them on, you may be asked to provide your marriage certificate for that dependent because they are dependent. You will be asked to provide a birth certificate for your children as newly eligible dependents, or if they're your stepchildren, your marriage certificate and the birth certificate showing the birth parent is your spouse. So you will have to verify dependents anytime you add them to the plan. That too is a part of the code. The last thing you can do is change your coverage levels or tiers. So this means you can change the type of plan that you elect to enroll into, or the level. So what do I mean by that? If you're currently in the purple plan, and let's say you're newly married and you want to move to the green plan, you can move from purple to green. That is a plan change. You can move from blue to purple, blue to yellow. within your qualified life event. Okay. You can also change your tier. So go from employee only in purple to employee spouse in green. Go from employee only in purple to employee family in purple. So you can make those changes for your qualified life events. We allow this across all of our life events so we don't have to deem which ones are required through other legal ramifications. So we do allow it across. Keep in mind, if you are in the purple plan and you move away from the purple plan, if you're participating in the health savings account, the HSA, you will not be able to contribute to that HSA anymore. Those funds will remain yours. You will still have access to it. That card is yours. That account is yours, but you cannot contribute to it any further if you're no longer in a qualified plan. So just keep that in mind as you're considering where you're moving or if you're moving to another plan type. Some tips for success. Let's make sure you're prepared. First, we are in a corrective window for open enrollment. That corrective window ends on January 30th, 2026. This period is really for you to review your paychecks. We've had 2 paychecks now if you're biweekly and 3 if you're weekly. Make sure you have the right coverage level. If you wanted family coverage, if you want employee spouse coverage, if you want employee child or employee only, check those benefits to ensure they are what you want. Make sure your dependents are all covered. If they're not, use the information that we've been emailing out, make the phone call, and make those changes to those plans. Review to make sure your plans are affordable. If it's costing you too much money to be in blue, maybe consider dropping to a lower option. The reason why we have such a large corrective window is because after January 30th, you will not be able to make any changes to your plans without one of the qualified life events we've just reviewed. So please take this time to make sure your benefits are affordable, you've got all your dependents covered the way you want, either to add or remove them, and to get all those changes in by January 30th. After that point, you will not have any exceptions if you do not have a qualified life event. We have sent out materials. We've sent out a pre-tax video training that's a lot more entertaining than what I'm doing today. It's really nice and funny and upbeat. We've sent information out by print. So please make sure you're reviewing that material. Is on social media, is inside of your webpage, is inside of your emails to ensure you understand everything and how it will impact you for 2026 because you will not be able to make changes outside of this corrective window without one of those qualified life events. And just a reminder to everyone, we covered all of the qualified life events. You did not hear me say, if you cannot afford to pay your premiums, you can adjust your benefits. That is not a qualified life event. So again, please make sure you review everything through the corrective window and make every change that you would like to make. This is super important to ensure your success in your benefit programs for this year. We thank you for your time today. We appreciate you all. And please let us know if you have any questions. Don't forget to review your paychecks, and we'll see you soon.